The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this 12th day of May, and what a market. What a perfect setup for the pattern that we've been looking for. It has been unfolding, and you just never know whether it's going to remain the template du jour or whether it's going to change. Look at this E-mini chart. This morning, I sent to my subscribers to my opening call, my usual Dow and my overview and the E-minis, 120-minute chart, but I also sent them the 10-minute chart. I also showed it here in the den. We were right here. It was at 6:40. So it was right here, about 10 to 7 or so. I sent it off to the subscribers, that's Eastern time, and also to the den, and I said there should be, based on the Chapman Wave methodology, there should be a peak D above that high that was right there with the left side, right side, price time match. And you remember yesterday we had that pattern that I spent a lot of time talking about, the Chapman Wave Eiffel Tower, capital A, uppercase A pattern. So it'll go straight up and straight down. I call it the Chapman Wave single leg A up. Well, it happened to be an F. I said F/A, but I said it's probably going to be a reversal pattern of importance. And lo and behold, at 2078.50, the E-mini yesterday plummeted down. And then it gave a, for me at least in my technique, it gave both a trough D and it was a Fibonacci wave 5 low. And that came in right there at 2057.50, around about 4 o'clock. Was that yesterday? Yeah, just after the close. So now what we're looking at is there was a bounce, went to peak A, peak C, peak D, pulls back, makes a higher low, and then it starts this huge move. It might have been a mystery to a lot of people, but in fact, I'm going to show you something right now, the template that we've been looking for. And what did it do? It went right to this level that I targeted as a resistance area at the 2073 level, and the high today was 2072.75, missed it by 25 cents. Almost a perfect right to there, perfect left side, right side price time match. And then it starts with these little doji candles right there, nothing. It's a lot of indecisiveness, let's call it, and then suddenly it comes down. Right now, we're at the low of the day, 2053. Why is that very important to me? I'll explain why. Here's the 120-minute chart of the E-mini. We're down 5.25, but we had been up 12 or 13 earlier in the day. Well, what happened was that 2079.75 high that was made on the 10th, yesterday, on the 10th, 2 days ago, came down sharply, had this counter trend bounce, and now we're making almost like, it looks like it could be a one-to-one to the downside. There's only leg C to the downside with plenty of room in the MACD and the stochastic. So here's the importance of this whole panoply of configurations. Let me show you what we're looking at. You remember the chart that I spent so much time on? It was almost getting boring that I was talking about it. But nothing's boring in the stock market. What I said was that the May high, and I spent a little time with Tom O'Brien when I was interviewed by him on Tuesday, and I spent a lot of time here in the show, showing that the match with the 19th of May high at 18,351 last year, almost precisely a year ago, had the pattern with that 20-period exponential moving average. So I got a question just before I was coming onto the show. What's with this 20-period moving average? You hardly ever talk about the 20. Yeah, sometimes you talk about the 21. How did you suddenly discover that the 20 is so important? Well, I have in the background of my charts a number of moving averages. Some are suggested by people. I always put them in just to check them out. Others are not. Others I just discover. But what I noticed, let me just check this one right here. So this one, this is on the chart where, why is it not coming up? Oh, there it is. Here's the 50. So I never used to use the 50, but I put it in just because it felt like it was quite important. But within this context, I also included other moving averages. And what I had done one day, I said, okay, let me start experimenting with a naked chart. There's just nothing on it except I'm going to use some moving averages. And I discovered when I was looking at this particular chart in preparation for a webinar that I had done, that I think it's almost time for another webinar. Oh, talking about webinars. Tonight, Tom O'Brien is giving a webinar. The reason why it's so important is that this is a very important junction, an important juncture for the dollar, important juncture for gold, important juncture for the market itself. So this is really a good time in which to be looking at different techniques and how they work and how Tom uses his volume techniques as well as other relationships that he uses. So this webinar tonight is a free webinar, basically. You're going to get a trial subscription to Tom's newsletter. I believe he's also throwing in his book, which is a rare, fabulous book, is Timing the Trade. And all I can say is that this is a very opportune time to get Tom's most influential advice and take the opportunity. Why not? So here we are. The Dow's down 51 at 17,659. Let me just run the numbers so I can get a little more detailed here, and I'll talk about the 20-period moving average. I'll talk about where we are, what I'm thinking, etc. The Dow's down 7 at 2056. The comp index is down 40 at 47. This is even with Amazon acting so well. At 47.20. Gold was down sharply this morning, then it went up sharply, and now it's down 7 at 12.68. You've got silver down 20 cents at 17.10. High-grade copper is now back at 2.07. I'm watching this one real closely. Crude oil, I'm going to show you this chart in a moment. I don't want to lose my train of thought. Crude oil made its leg D. Remember, Julie was talking about this, sending me emails, and I said, yes, I think we could get a leg D. I think we've got leg D. I will do copper, Andrew, in a moment. I just don't want to lose my train of thought for a moment. I want to say that there could be a leg D and a turnaround in crude oil if the dollar does start to expand to the upside. This is just a shorter-term trend because I think the major trend in gold and silver is still to the upside, but this is a well-deserved 4, 8 week, 6 week, I don't know what it is, rest period. Most importantly, we're looking at bonds down 20 at 165 and 1930 seconds. This is going to be as I said, a panoply of configurations and techniques going on right now, technical tools as well. The dollar is at 93.96, up 17 cents. Now I can get to this just real quickly. Let me say that the pattern that we were looking for, and for subscribers, the reason why yesterday I had an update after my show was to add to the short side. The reason why we added the short side again this morning is because it looks to me as if I wouldn't go short everything, but I would say that there are certain sectors that are highly vulnerable. There are certain indexes that are highly vulnerable. And there are some stocks that possibly could still move slightly higher. I mean, we do have a long, which is still so far in the plus column. It had a nice move up yesterday in intraday, so I'm watching it real closely. So yes, the questions are coming in. Question on crude oil, question on copper, and a question on the 20-period exponential moving average. Basil Chapman, I'll be right back. Dow's down 50, S&P's down 7.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, both folks. We're back. So let me go through this. Dow's down 62, S&P's down 9. This is the pattern we were looking at. The high of May of last year came down, and that 20-period exponential moving average became the seesaw yo-yo swing line, so that it went below it, above it, below it, below it. But what happened is that high of May was the high, and it kept making lower lows and lower highs. Just keep that in mind. For me, that is just the essence of what we're looking at. And then what happened, it broke down, went to the August low, and then ran up in a peak, A, B, C, D, E, F, the 6th highest peak, to November the 11th, and then it started the same series. Look, the yo-yo effect, it didn't break down for a long time. This is almost like the pattern that we saw in March of 2000, where the NASDAQ still held quite well, and the S&P, it was the Dow that broke down. So this is really important. What we're looking at here is that the pattern from November, where that 20-period exponential moving average became the fulcrum, the sine wave midpoint, until it broke down decisively in late in January, when it smashed to the downside. That started a brand new move from January 20th low at 15,450 all the way up to another high in the Chapman wave, this third peak D. Usually you don't get more than 3 buy modes in a Chapman wave without a really strong sell mode that comes in. So far, this is the strongest time, not price, time movement we've had. Now look at this. Look at that red line that is becoming the fulcrum line. That's why yesterday I said to subscribers, to my opening call, we should expect a rally. We're going to short that rally. And that's what we did. And then I said there should be another pullback. Remember when I was interviewed with Tom, we were down here the other day? I said there's a real good chance that we're going to go above and then come back down. And we've just done that. Now, the speed with which we've made the second decline under the 20-period moving average is nothing, because it's the intraday. I mean, anything can happen by the end of the day. I don't think it'll go back to the 17,000, round about the 17,776 level. We're down 120 points from there. But that would be the line of resistance. And there's the channel that I drew in for subscribers. So it's the match. Now, how did I get to the 20? It could be 21, it's 20, 21, it doesn't really matter. But what I did is, this was not a big, thick red line, it was a thin line. And I used a whole bunch of lines in my experiment to say, what is the pattern on this particular chart? The 20 period might not be working for other charts. It's this particular chart. This is conforming. This is where, when you do your analysis and you start to build some kind of a program, a system, you don't want to form fit. In this case, I want you to form fit. Why? Because let me show you something. I'm going to go back. The importance of this 20 period moving average was not very short term. It was more intermediate term. Look how it held so beautifully in that move from February of 2015 up to the high of July. What was that? Around about July the 7th of 2014. So I looked at it and I said, this is really important. And as I did it, then when I made it thick and red, I said, oh my goodness, I did it when we were somewhere around here. So I've been looking at this for a while, maybe even earlier. But I didn't decide to use it as an actual tool until just recently because I needed the proof. Now I think we're getting the proof. Okay, and we're also way below the 9-period exponential moving average. So I can't answer you to say, oh, it's it's because it's one of the important look-back periods for the moving average. I can just say in this particular case, I've used it because with my experience, my eye tends to pick out things that I believe would be very important. That's all. 2021, that's what I'm doing. So I can only say that that's maybe a little bit new to you because the questioner has been to all my courses, has done every level of the Chapman wave methodology. So all I can say is I know that I've spoken about it briefly before, but in this case, it's serious. Now, I've also had a Chapman wave indication that flashed intraday this morning already to say that at some point we should see the futures move 9 to 11 points higher. It could come from lower down, but it's just a warning to say there is still residual strength and it should happen within 2 days. That conforms exactly to what I'm looking at. You see this candle right here? The candle of the 3rd of December. Look what happened. There was one final thrust to the upside before it dropped again sharply down to the 17,130s. And then it still had another move and another move and another move. So the zigzag pattern, the yo-yo zigzag pattern, I think is here. There are going to be plenty of opportunities to short. We could have shorted yesterday when I said intraday. We used other tools. We went short other vehicles. But the Dow, we could have done that. I only did that this morning. We had a second chance, which was not quite the level that we would have got yesterday when I had my update, but good enough. So here we are. Now I can answer these other questions. So the question is crude oil, Brent crude oil last day. What letter is this? I've got a peak C1, peak C2. It just missed making a D, about 48.29, trading at 47.09, down 53 cents. So the questioner says, is this a new breakout? Now, what is the question? What wave count in the weekly? I'll go to the crude oil in a moment. That was leg C. And did BZN16, which made a 6-month high, did this start a new wave count? No, it has not. If it goes above 48.29 on the end contract, or is that June? I think it's June. Then it will definitely make a leg D. So it's very close and it hasn't made the leg D yet in the daily. It's the July contract. So I'm looking at this, and now as far as the crude oil is concerned, look, CL it made a leg D. Excuse me. That was what I was waiting for. So crude oil went right towards the 200-period moving average, that 47.43 level that has been, the 47s has been my target. It went there, now it's pulling back. I'm going to go through a bunch of things. It's leg C, and crude oil still looks good, but it could have a digestive phase between the 47s and the 42s over the coming 2-3 weeks. This is kind of what I'm thinking here. Now, let me explain something else. If you're looking at the dollar is up a little bit. It is up 10 cents at 93.93. No big deal. The MACD is good, but the stochastic is only at 65. The weekly chart is struggling to rally. So I'm looking at this and I'm saying, I think that we could get a counter trend rally in the dollar as gold continues this consolidation after a spectacular movement. All I've been saying is that after such a brilliant move, the English always say, oh, brilliant. When everything is good, they say brilliant. Oh, I say brilliant. At December the 5th, the week of the 5th, it made a low at 10.47. This is the continuous contract. And then it went peak A, B, C, D, pulls back, makes the cup formation, spikes above to go to an E. And this isn't really a cup formation because it did close above. Yeah, it did close above the 1289.70. It closed at 1290 on the week of the 29th of April. So this has got a little different impact. It's more the weekly that I'm looking at leading to a consolidation phase. Let me make it a little bit bigger. Leading to a consolidation phase. Doesn't have to break down. I just think that gold at 1268, there's no harm in it pulling back to the 1230s, 1220s. And then we'll see what, oh, I didn't see Ken in Kansas City. I'm sorry, Ken, I'll be right with you straight after this break. I know you want to look at Apple. Give me a second and I'll be back. My apologies, I wasn't looking down, I was looking up at the charts. But now I'm looking at it, and I'll be back with Ken, Dow down 47, S&P's down 7. Let me show you the 10-minute chart right there. Okay, trying to form some kind of a base here. I'll be back straight after this.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let's go straight to Ken in Kansas City. Ken, how are you?
I'm very good, Basil. Good to talk to you again.
Good to speak with you. You'd like to look at Apple, right?
Yes, I wonder if it's a buy here or you think it's going to go down a little more.
So let me do two things. One is I want to talk a little bit about Apple just on the fundamental side, just as I see it, and that is on the one side, we're looking at Apple. I've always used the store at Chestnut Hill, the Apple store here in the Newton area, Massachusetts. It's always been, for me, it's just been a wonderful indicator of what's really going on with Apple. I remember talking about it when Apple was, you remember the December, when we went into that December, January period of 2015, 2006. Well, no, it wasn't that. It was right April. So then we went to the, yes, that's right. It was the December of 2014, January of 2015. I was looking at this and I said, I'm beginning to get a funny feeling about Apple. I do not see as many people in the store as I had in previous years. And that to me was always a tip off. But at the same time, it was still a lot of people. It just wasn't quite the same. And then this past December, when Apple was December, when Apple was at 119 to just coming off the 119, it had made a high of 134.54. I think it was in July. I say, this is completely different. Something's going on in Apple. I think there's a change in Apple's character on a fundamental level. They're getting many more assistants to help people. But as far as sales are concerned, I don't see people lining up like they used to. So a lot might be happening online, but the stores themselves are going to cost Apple a lot of money. And to keep the personnel there, this is not Amazon where it just goes via a text or a dot. You click yes, and it gets shipped to you. This is very different. This is keeping people employed, paying huge. I mean, at the mall, I should imagine that they're paying. I know that they basically bounced out a small card store because she couldn't afford to pay $10,000 a month. $10,000 a month for this little tiny, like a toilet size, right? And so Apple must be paying 30 grand at least, 25, something like that a month, just for that one store. And I don't think they're getting that kind of income profit. So that's just on a fundamental. And I'm using one. Usually you can't use anecdotal stuff, but this is anecdotal stuff in the sense that I'm trying to look at the bricks and mortar as a problem in this environment. We're seeing that all the way through the retail area, and that the Amazons and the way you can do, look what's happening to Staples. So it says to me that there's a problem. So on the fundamental level, I'm saying it's a great company. It's like the General Motors probably of the 1930s, but at the same time, it's going through a growth period that is different to other growth periods. So that's on the fundamental side. Now I try to put it together with the technicals. And the technicals, I've said that, I could be wrong, but my impression is that Apple has made a major hat-trick top in the monthly chart, weekly chart, daily chart, and therefore I'm expecting that the low of August of 92, round number 92, should be taken out. And if it gets taken out, it's a double low. There was a low back, there was a 95.18 key low from October the 14th. So it's taken out today. The move below into 90.23 says to me it's under the 200 period exponential moving average. There's just a lot going on that says Apple is under intense selling pressure now. It's completely different to the buying pressure. And therefore, all I could say is that if you were wanting to play a bounce, then let's see how the low today is 89.47. I would wait to see how, I wonder how I can do this now. Underneath, yes. So in my relationship of the huge arch or the lowercase m formation, I would give this a little more time, but I'm going to say a close today below 92 gives you only Friday. I'm even going to give it Monday, into Monday to close above 92. If it cannot close above 92 by Monday afternoon at 4 o'clock, I'm going to suggest to you that you're probably looking at between 88 and 86 before Apple can have a pretty decent bounce, and it would only be a bounce. I don't know if you want to play the bounce. So if your question is, I should have asked you the question, but if the question is, as an intermediate term, even if I'm willing to put up with a 10% loss, is Apple looking like a stock that wants to go back to the 110 to the 120 area? And my answer, based on the technicals that I'm looking at right now with the MACD and stochastic in the monthly charts very negative, I'm going to say no. I can't see it. If you're asking me about a short-term trade to get into this ugly candle of the week of the 29th of April, where it started off, it opens at 105 round number and it closes down at 93. I'm going to say, yeah, I can see a bounce coming at some point. There are a lot of fund managers that still favor Apple, but my thinking is that the whole tide has changed from shorter term to intermediate term and now to long term as being going out. So the tide is going out, it's receding. So that's my answer. So now I should have asked you the question that I should have asked at the beginning. Ken, are you looking at this as a trade or a position?
Well, I was looking at it for a trade.
Okay, if you're looking at it as a trade, if it closes above 92 by Monday, there could be a bounce between that 92-ish area and I'd say into about the 94 to 96. I don't see more than that. I think the selling pressure is just going to constantly come into Apple. So it would only be a bounce trade. I'll tell you what we'll do. I'll look at it again on Monday. Let's see where it's trading, and I'll talk about it. Someone just remind me, if you can't call in, I'll still do it on Monday because Monday is going to be a really important market day all the way around because we'll have completed the weekly closes, and we'll see what happens tomorrow at 4 o'clock in terms of all the charts. But I can only see a bounce, Ken. In fact, what I would even say to you is I would rather be looking to short Apple on a bounce rather than buying it. Because in a phase like this, look how quick the reversals are to the downside and how sharp they are. It went to a peak C in the weekly chart on the 15th at 112.39, and within 2 weeks it had dropped to 104. Within 3 weeks it had dropped to 92, and now it's even lower. So the selling pressure is like waves. It's like a tide when you're surfing and you're not looking behind you, and suddenly this wave just comes, bam, and it knocks you for a loop, and then you get up thinking, okay, everything's okay, and then the next wave comes. It's exactly like that. So I'm very concerned that Apple, as a very key member of the Dow, is going to have an impact on the Dow, limiting the upside. I shouldn't say I'm concerned. I'm just thinking that could happen. And one by one, we're seeing some stock. GE is just doing exactly the same. These are not good signs. So I hope that helps you in a way.
Yeah, it does. What I've been meaning to ask you, what do you think about this DuPont Dow possible merger? What happens to the stock when that happens? Do they combine them, or do you know? So
if I recall correctly, it's going to be DuPont, and it'll still be titled DuPont, right?
Yes, I think so.
Okay,
I don't know.
Well, I don't know. Let me do a little research during the break, and I'll be right back. Hold on, Ken. I'll be right back. Basil Chapman, Tiger Decisions Hour. Be right back. Countdown 42.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
During the break, I didn't get a chance to do that research on the DuPont Dow, but as far as the charts are concerned, DuPont looks to me like it's going to be consolidating at a fantastic move back up towards the 68 level, and then it came down to 63.5. It's now trading at about 64.46. Yeah, 64.46. And if I draw this in, regardless of anything that's going on, I'm just going to draw in the weekly chart, the Chapman wave H pattern, lowercase h pattern, and it says the upside should be limited for now. If I look at Dow chart, DOW, it's almost the same thing. I could have actually, because they're both chemicals, they have the same kind of pattern.
Yeah.
I would just say to you, you know what? I'll try to remember to do it over the coming few days, maybe on Monday as well. By then I'll have done some work. That's kind of a fundamental thing that I'm not sure just what the joint company would, what the outlook would be. All I can say is if the charts are kind of matching right now, unlike Staples and Office Depot, these companies are doing well. So there's something, I think that the amalgamation should be very good. There's always a cost-effective period that goes after the takeover. There are always so many expenses that people don't know about, so many underlying problems that they don't know about. So I suspect that DuPont right now is going to have a difficult time on the upside. I would not be surprised if it becomes DuPont, not maybe it'll be called DuPont Dow. I'm not sure about that.
I think that's what it'll be.
Yeah, and if they do
Dow DuPont, actually, is what I think.
Maybe Dow DuPont. Yeah, maybe Dow DuPont. They want to keep those famous names together. And if they do that, I don't think it's going to affect the chart very much. I do see right now that there seems to be limited upside and probably limited downside, but the percentage to the upside looks less than the percentage to the downside.
I just didn't know where they would issue a new stock or how they
No, I don't see why they would want to do that because it's so easy. They just join the names together I'm just trying to think. What was the not Snap-on Tools, the other one? Smith, Black & Decker. They changed their name so that there are a couple of companies. They just join the two names and the companies amalgamate that way. But I hope they keep the names. I'd love to have Dow and DuPont still around. DuPont goes back to the 1920s, just like GE. Right. They're the only stocks that are left in the Dow.
Well, thank you so much for the info, Del. I won't keep you any longer. I know we have other callers. Thank you so much.
Thank you for calling, Ken. Always appreciate your comments and your questions. So let's do this within the context of what we're looking at. So I did a bunch of things. I haven't checked my emails. Give me 1 second here. I'm not going to be able to proofread them or anything. I'll just take them right off the cuff. I did that one. XLE, Bob wants XLE. Good question about the XLE. I think it's in the same category. Yeah, peak D in the daily, peak C in the weekly, And leg A in the S&P Select Energy Spider Fund is down 10 cents at 65.55. I think it has limited upside. I think it's the H pattern. It says to me that because it's a peak C in the weekly, that there's probably limited downside at 65.55. I want to come back and be looking at the XLE between $62 and 60. Gets this, somebody just call me and remind me, because that's where I would look to see whether or not we're getting some signals in the market that says we've reached some kind of plateau. Now we can have another big move to the upside. In the meantime, I think the trend is down and we've got to stay with that trend. Next one is EWH now. Hong Kong? Yeah, Hong Kong. So I've got, this is the Hong Kong EWH. It's actually not the best vehicle to use. If I can go to HKDOW, you'll see it's a little bit better chart. I've articulated, I've got the notation. Made a peak F top already, trading at 442.45, down 2.76. This matches the chart of Hong Kong. I think it's, yep, but it's the Dow equivalent. And it made a peak F top on the 28th of April. It's pulling back. It's gone right through all the support levels. The weekly chart has gone to an A and a B. It looks to me at 442. It should trade down to low 430s, and then I want to have a good look at it to see if we get any signals there. Now I will go to the EWH because, yeah, the patterns are very much, the patterns are the same. So I give you the EWH trading at 1907, down 10 cents. The monthly chart is really the key. It's gone to A, B, C. I had these all notated. C, it didn't make a D, but it did make a D there. It went to a peak E. May of 2015, last May, just like the Dow and the S&P, it's pulled back sharply. It's under the 9-period moving average. The technicals are very poor. I think this has got a problem. So EWH, I would not be going along the EWH. I'd wait. I'd just wait for a little bit longer. Let's see it holds. But it's at 1908. Let's see if we can get to the 1850s. Text me again or email me at 1850s if it gets there. L. Let's see what L said. L's the one who always picks the exact tops to the penny or the bottoms to the penny, and he got the Nasdaq a great. Let me see what he says. Oh, bravo! Oh, great one. You nailed the short. I lost money yesterday, but I am still up on the QQQ at 104.41 buy. I do not think that will be taken out. If it does, look out below. Hey, I'm with you. And hey, I have to congratulate you. You're the one. You picked it to the penny, the low, and it had a fantastic move to the upside. Yeah, thank you very much. So now we've got a couple of questions. VNQ. Yeah, this is a pattern. It's a very unusual pattern, but I recognize it as a pattern of a short-term topping pattern. So what is the VNQ? It's the Vanguard REIT ETF. In the weekly chart, it's gone to peak A, B. I thought I did this the other day. What happened? C, so that's A, B, C, D. Oh, isn't that interesting? I want to go to the IYR to see what's going on. A, B, C, D. See the IYR. Yeah, so this is going to have a consolidation. It's very good in the weekly, but at 84.54, the Vanguard REIT ETF trading at 84.54, down 13 cents. I think it's going to touch the 82.74 9-period exponential moving average. Remind me when it does that. What are we going to do? Monthly chart is still strong, but it has the MACD has not crossed. Well, the month is still unfolding. Hasn't really crossed positive. Monthly is still quite good. Looks like it could try for a double top towards the 89.27 area. It's right in the middle of the range. It's acting pretty well. I do think it could pull back about 2 points over the coming week and a half. So let's leave it there. And the next question I had was, next question. GT says, AEG, Aegon, AEG. Whoa, down 11.48% today, down 64 cents at 489. Oh my goodness, this looks terrible. What's the question? Thanks for pointing it out. You said to resend you this. Oh, okay. So yes, of course. I did think about it. I went through it, so let me just go through this again. Travelers That was a question. Oh, the break is just about to come, and I haven't fixed that clock yet that always buzzes at this time. TRV, I don't know. By the time it stops buzzing, I've already forgotten about it until the next day. Yeah, I'm going to do that in the break. So I'll be back with some of those insurance stocks, Basil Chapman, Tiger Technicians Hour, buzzer going. It reminds me that we've got the last break coming up. That's not the purpose of the buzzer. We're down 50 in the Dow, down 7.5 in the S&P. A little stronger weakness in the S&P than the Dow. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So I got a question about RIG and ORH. RIG is Transocean Limited. It made a peak D in the Chapman Wave daily chart. It's pulled back quite sharply from just over 1150. It's now at 961. There's a triangle formation, a wedge, let's call it. I only put stock into this in the sense that I like to look at it to say, where's the resistance? But to tell you the truth, time alone moves you out of these apexes. You can keep going to the side. So I'm just going to say that if RIG takes out, if it breaks under $9, which I think it's going to do, it's just going to test that low that was made at 834, double bottom low on the 4th and the 7th, I think it was, or the 6th, 4th and 7th. It's just going to test that and probably take it out. I see nothing here. I really don't. And that includes the weekly and includes the monthly. But if I'm wrong, you will see by Wednesday to Thursday of next week that RIG is at 1132. It's broken out of this trend line resistance, but it's not important that it does that. It means that at that stage, the candle wick of the 29th with a high of 1165 becomes the operative magnet. That's really the way I'm looking at it. I don't think it's going to happen. I'm just saying if I'm wrong. And ORH, I think ORH is the same sort of thing. Made a peak E in the Chapman wave, and it's come down sharply. And the weekly chart is in a peak C. But you remember what happens, I should have said this earlier on. There is no guarantee that you're going to make a D when you're coming off major bottoms. You can make a number, look, peak C minus back on the week of May the 8th of 2015. Peak C minus the week of the 6th of November at peak C. And that was much lower down. It was a 32.78, and we're trading at 27.06 right now. That's big. Now we've gone to a leg C, a peak C, and it hasn't gone to a minus yet. But I can just tell you this, at 27.07, if for any reason, instead of starting on the way up to make leg D above 30.47, it takes out this low right here of the 22nd, 26.31, that's not 45 cents. You're going to be testing this low right here of 25.13 the week of the 8th of April. This is a difficult market right now. The tide has changed. We're still in the major down move from May of last year. And this right now is this has the potential, because no one's believing that the market can go down. It has the potential to move down sharply. I'm going to go back to this chart. 1 second. Here we go. Before we're wrapping up, this is a really important chart. Yes, you can chop around here, but if it's to copy those patterns, we're going to have a major break to the downside. My thinking, of course, is a little different. I'm thinking that at some point in the 17,000, the low 17,000s, say 17,300-ish, there's going to be something that gives the market support. It's that support that has the chance to go to all-time highs this year rather than the next year. And that's what I'm thinking. I'm even thinking this summer into the fall. And then you've got to be really careful. But that's the way we're treating it right now. Okay, on the day, I've got the Chapman wave, Trin gauge flashing. At some point, we're going to get a good 9 to maybe 11-point rally in the E-minis, which should affect the cash indexes. But that can come from lower down. I'm just saying, be aware that at some point, if there's a big rally, that rally could extend, just like it did this morning, from early this morning into the opening, and then it gone. Now, I just want to show you one particular chart as we're moving out of into your swim lesson. Look, here's the SPY in green, and here's the oil USO trading down. So once again, they're kind of going in sync. Now, I just want to do one thing as I wrap up. I'll be back tomorrow. Email me. Just why don't you check out my opening call? I think you'll find it really interesting, especially in this really important period. So here's the VIX index. It's making inverted turnaround in the 15s. That's selling pressure. It gets to 16, you'll see triple digit down. So this is going to be very important. If the VIX goes under 15 today, you'll get a nice bounce. Hey, have a wonderful day, everybody. And I'll just show you this chart as we're going out. This is the 10-minute, starting leg C down. Have a wonderful day. I'll see you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.